Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from ALE Property Group is Managing Director Andrew Wilkinson. Andrew, thanks for joining us.
Thank you for having me.
Andrew, ALE Property Group is Australia's largest listed freehold owner of pubs. What are the highlights from your latest annual results?
This year we saw our distribution increase, the value of our properties increased by nearly 10%, and ALE securities performed very well through the year.
Thanks, Andrew. And what was ALE's distribution for financial year 15?
The distribution was 16.85 cents, up from 16.45 cents the previous year. It was 100% tax deferred, and that exceeded guidance on both counts.
And could you tell us where the value of properties moved throughout the year?
They increased by 10% to nearly $900 million. We have 86 properties spread through the 5 mainland capital cities of Australia, mainly in Melbourne and Brisbane. Our valuers, CBRE, they had regard to the high quality of not only the location, but the tenant and the lease arrangements. And the interesting thing is they had fairly limited regard to the longer term value coming from the market rent reversion. In that respect, we'd encourage our investors to look to the publication we made back in 2013, wherein we looked at a portfolio value analysis around what that future market rent might mean. Since that time, the profitability of the properties has become even stronger and interest rates have fallen nearly 1%.
Andrew, what are the key features of ALE's capital structure?
Today, the balance sheet is very strong. We have an investment-grade credit rating, we have long-term hedging, we have long-term funding. Our debt maturities are spread across the next 2, 5 and 8 years. It's a very secure and low-cost structure where the average fixed rate today is 4.35%.
So how have ALE's listed securities performed this year?
They've performed strongly. The total return, both distribution and security price increase, together has been 34%. Over the last 12 years, an average of 22.5%. Put in very simple terms, if you invested $1 back in 2003 at our IPO, that'd be worth around $10.50 today. That's seen us outperform all the other indexes.
So Andrew, tell us about ALE's gearing levels.
We've seen the value of our properties increase significantly this year, nearly 10% to $900 million. That's seen our gearing fall from 51 to around 48%. We do have a target gearing range of between 50 and 55%, and the board's giving consideration to a range of options which would see us restore that gearing to that level over the next few years. We'll consult with security holders and update at our annual general meeting in October.
Andrew, finally, are there any other aspects of the general market conditions you'd like to discuss?
It's a strong property market out there at the moment. We look at a range of acquisitions and we're continuing to exercise the discipline that has seen security holders enjoy strong returns. We're going to stick with that policy.
Andrew Wilkinson, thank you for the update on ALE Property Group.
Thank you very much.